Greetings traders out there in Traderland. My name is Dez here at Grok Trade on Thursday, July 26, 2012. Looks like Facebook has posted a $157 million loss in their very first ever report as being a publicly traded company. And it shows that their monthly active users were at, oh wow, 955 million individuals as of June 30th, which is an increase of about 30% year over year. Right now, this is the daily chart of the Facebook, and we broke out of this triangle to the downside on Thursday, closing around 2684.85 area. And then if I go to a 5-minute chart, whoa, we're at 2470, 2480 area. So the market has brought it down. So 2480 would put us about right here. So not too great. Well, let's take a look here at the S&P daily. Dow is up, wow, 212 points. Up 1.67%, the same on the S&P. Nasdaq up 1.4%, the Russell's up 1%, but laggy. Nasdaq, small caps laggy compared to the others. Banks only up 0.75%, so also laggy. So all you Grok graduates out there, pay special attention to that. VIX down a whopping 9.36%. We're at 17.5 here. Commodities doing fairly well. Gold up 0.7%, silver up about the same, and crude oil up 0.6%. US dollar takes a huge hit today, down a full percent, which really helped the markets quite a bit. But check this out, the trends at 0.64. Alright, Grok graduates. Transportation at 1.5 and utilities at 1.8. Taking a look at the markets here, I mean today a 200-point boom to the north. In the middle of this triangle, you can see these lines here. Yesterday I was really tempted to buy long, and I didn't like what I was seeing at the end of the day. I did not do so, and sure enough, I get a 211-point rally. But we're still within the confines of this apex of the triangle. And what's interesting is we went all the way to that upper trend line, touched it, and came back down. And here we are going into a GDP. And we have right now, as far as the US GDP is concerned, the advanced market expectation estimates are coming in for the second quarter around 1.2%, which would be a huge drop, which I just don't know if it'd be that low. Some estimates are coming in, and analysts are coming in with a 1.4 drop, and that would be sobering within itself. I mean, put it in perspective, we were at 2.2 last quarter, we're at 1.9, and now for us to drop down to 1.4, you know, to have so many consecutive GDP drops, there should be, I mean, that's knocking at the door of a significant recession. And however, with that news and those expectations for us to be popping like this, it could in large part be due to individuals believing this is going to force the hand of the Feds to come out with a QE, or quantitative easing 3, and a lot of people out there assuming that's going to happen. However, don't assume. That could get you in a lot of trouble. I believe that we had a big run here and a drop, bringing us to a support level with a trend line and a doji. What happens after those type of formations is a pop. So you had a lot of shorts covering in this rally right here. We're still amongst much of moving averages and trend lines, so with that I don't get too excited. Matter of fact, I think tomorrow, if the GDP doesn't shock us to the upside, I'm going to see us stalling or giving most of today's gains back. And so that is something that we will be looking for. Gold right now sitting at 16.15, oil at 89.50. Went back to Facebook 1 minute chart, 24 bucks. It's an all-time low for Facebook. Do us a favor, share us with a friend, share this video with other colleagues, and thank you for leaving a comment and liking this video. And I hope that you come back on a daily basis and watch all the videos that we do here. And we have stock videos that Mark does, futures videos that Matt does, and we also have Spanish videos if you speak Espanol. And then we also have the Qs, so if you trade ETFs you can listen to Carolina. There you have it. Get the very best technical analysis and broad market review right here. Thanks for participating and being a part.